One of the biggest mistakes you will ever make as a forex trader, be you a beginner or an expert, is simply not having a trading plan. And trust me, this is really important. In anything you do in life, plans are really necessary, and this also applies to your forex trading career as well. So when you want to trade forex, it's very advisable for you to have a plan. And if you don't have a plan yet, and you don't have any cautious plan you are following, then this video is for you. So hello guys, welcome to Forex Hustle. On this channel, I share tips related to cryptocurrency and forex trading, all about trading, but more of forex trading, giving you regular tips on how you can make forex trading a lifetime business, like it's something that you keep for the rest of your life, that will sort out your bills and everything. So if that sounds like you, don't forget to smash this and that subscribe button, like this video so the algorithm will recommend it to more people. So in this video I'm going to share with you seven cues that every single forex trader have. Trust me, this is a simple cues that brings up that 1% of forex winners. Every single 1% of forex winner on the internet has the 7 key rules that he follows day in day, he or she follows day in day out. And these are the 7 key things I'm going to share with you from my 3 years as a forex trader. So with that already said, let me get started into today's video and share with you these 7 key forex trading tips that you need to keep in mind whenever you want to either get started with trade or after trading. So that already said, let's jump onto today's video. Let me share these tips with you. So that's tip number 1. When it comes to trading forex, is simply what are your time frames. So when I say what are your time frames, the time frames really depend. Time frame literally depends on the type of trader you are. So in reality, we have 2 types of traders. We have the swing traders and then the intraday trader. So in case you don't know, let me explain them to you. The swing trader is someone who can place a trade today and leave it for like 2 days, 3 days to 1 month interval. Like you just place that trade and leave it. Meanwhile, the intraday trader, which is the kind of trader I am, that yes, I most of the time only focus on day trading. So the kind of trader I am is I place the trade today and make sure I close that trade today. That's it. Whether I lose or win, I make sure the trade doesn't go above today. So I'm a day trader. So the time frame you use really matters, because if you are an intraday trader, you cannot analyze the market using the short-term time frames. Like you cannot use the 15 minutes, the 5 minutes, the 1 hour as an intraday trader. No. So before you start trading, ask yourself which type of trader you are. If you are the swing trader, some of the best time to use to analyze your market is like the 1 day, the 4 hour, and the 1 hour before you come over to the 15 minutes to determine your market. But for we the intraday traders, some of our best time frame to actually trade is simply we use the 4 hour chart, the 1 hour, and the 15 minutes, because this one gives us the best understanding of how the market has been going on today. Because all we trade, we will only trade on based on what the market is doing today, and we don't care about what the market did yesterday. But for swing traders, you need to analyze what the market has been doing for some few days back before the day you are coming to place your order. This is really important. So get your time frames, write them down in your trading diary. For every trader should have a journal or a diary. So I don't really know the difference between a journal and a diary. So as a trader, you should have these things done, because if you are a swing trader, you know that okay, I'm about to analyze the market. No matter the strategy you use, the time frame really matters, because there are some markets from 2 days back it has been an uptrend, but all of a sudden on this particular day it's having a downtrend. But that based on how the higher low and the lower highs are actually forming, you'll be able to know okay, this market will go up in in a few days time, or it will come back down again. So but for we the intraday traders, we simply focus that okay, so this market is going down. So for the past 4 hours, this market has been facing just this direction. That means that there is still hope that this market will still go a bit better, give us an idea of where to enter the market. So but for you, the swing trader, you cannot enter the market using the 15 minutes chart, because it will be a big trap for you. So that's about the point number 1 here. Simply pick your time frames, and I'm giving you the best time frames, be it a swing trader or an intraday trader. So now let's move to the point number 2 of the plan you should have as a forex trader. So the point number 2 here, what you should have in your plan as a forex trader, is simply the sessions you trade. So in case you don't know, we have 3 main forex sections. We have the Asia section, which is there's in Australia session, we have the London session, and then the New York session. So the first session we have is actually the Asia session, then we have the followed by the London session, and finally the New York section. So in these 3 sections, trust me, every single strategy you use to trade have one section that pays the most. Like there's one particular section that whenever you trade with that particular strategy, you hit yourself on a higher profit. And this is the importance of backtesting. If you're a forex trader, I say always advisable to backtest your strategy. And when you backtest your strategy, you see which of the market you actually make more money. Because every single backtesting to shows you the time, the date, and then the year you are actually back testing in. So that will help you know that okay, my strategy worked during this time frame of the day. Like the market is always in my favor, and this time of the day the market goes against me. Like I'm the kind of trader that I trade the London session. The London session happens to be one of my favorite sessions. Like yesterday, I decided that, okay, let me try the American session. Yes, trust me, the American session wasn't for me at all. But all the trades I took during the London session were one of the best ever. Because I took 10 trades in the London session, and all of them went on 10 smoothly. But the 2 trades I took within the American session, like the New York session, like wasn't something to actually write a record about. Though I do record it down, both my loss and wins, I record them down in my trading journal. And this is one thing you should know as a forex trader as well. Analyze the market, look at your strategy, keep trade all the 3 sections, like for like 1 whole month, trade all the 3 sections, and whenever you trade, write the section down, write your trade record, every single section, and then at the end of that month, sit down, take a look at them, and look at which section actually gives you the most profit. And trust me, that particular section is the best section for you to trade. This doesn't mean you shouldn't trade other sections. So you can trade them, but your main focus should be on that particular section that is in your favor. Because the game as a forex trader is to stay in the market for as long as possible, be disciplined, and also make money at the long run. And that is something you need to know as a forex trader. So that is about the point number 2. Is simply pick your sections and focus on those sections. Make sure they are sections that really work for you. So now let's move to the plan number 3 that you should have as a forex trader. So the third thing you should have you should know and have as a forex trader is simply what are your trading pairs. Like we have different pairs of trade on currencies to trade as a forex trader. Because the forex name in general, you can trade almost every single thing. You can trade crypto against normal currency. You can trade indices and the rest. But as a forex trader, it's not advisable that you trade every single pair on the market. There are some strategies that might not work with every single pair. Like if you are someone who trade if you trade US dollar and gold, one of the best strategies that I see that normally works with that US dollar and gold is the pullback and the broker strategy. Those 2 strategies always work out to that US dollar and gold, mostly because we often have an uptrend. If it takes an uptrend, it goes very far, and when it takes a downtrend, it also comes very deep. And then if you are someone who trades Japanese yen and then pounds, you need to be very skeptical because you often have a very high fluctuating rate, so as the euro and US dollar. And these are the things you know. As a forex trader, pick any particular strategy you have. So this one thing I always advise everyone who connects with me about forex trading, simply tell them that pick out one particular strategy and make sure you use that strategy for a long time. Master that strategy, know the markets that strategy works for, and focus on it. Because there are some strategies that, trust me, when you take them to other markets, you will not see any green light. But on a normal market, trust me, it will be one of the best things you should ever have. So as a forex trader, it's advisable you pick some specific pair. Like if you want to trade Japanese yen and Great Britain pounds, focus on those coins as your main coins. This doesn't mean you can't trade other coins, you can trade other coins, but those ones should be your main coin regardless of the session you are trading. If you are trading US dollar, euro, pick them as your main coin. If you are trading any other pair, just pick those ones as your official ones and let them be in your journal. So that any day before you trade, you look into your journal, you see that okay, these are my main official pairs. So when you go into the market, your first attention, your first focus draws to those pairs, and you work with those pairs for a long time. Then if you feel like testing out other pairs with your strategy, then you can go test them. But make sure you have some official pairs you trade, and this way you are going to be among the 1% successful forex traders. So that's about it. Third tip here when it comes to forex trading, simply have your own trading pairs, know your pairs, and focus on your pairs. So the point number 4 here is simply how much are you willing to risk per trade? So this one really boils down to the total number of the amount of money in your account. Be you a beginner or an expert, it's advisable that you have a specific amount of money in your forex account that you are willing to trade. And when you are trading, you are not willing to lose all at the same time, or you are not ready to flip all over at the same time. So it's always advisable that you know the amount of money you are willing to risk per every single trade you take. So one of the best advices I always give is that do not risk more than 1% of your total funds if you are a beginner. Or as an expert, you've been on the industry for quite a long time, so you probably know the upside and downs of it. So for a beginner, I would not advise you risk more than 1% of the total amount of money you want to use to trade. So how you determine the percentage you lose or use per trade is when you calculate your stop loss and your take profit and the rest. And one of the best ways you can do this is simply going on the internet and looking for forex risk to reward rate calculator. That one will actually give you your lot size, because the lot size you use determine how much you're actually going to use, how much you are going to waste per trade, and this one determine how much is in your account. So if you are using an account that has up to $11,000 and you want to risk only 1%, like I said, you can use a lot size of 0.1. This one will always maintain that your $100, $1 lose usage, or you can use 0.5. Just make sure that you are not losing, you are not wasting up to more than 1% of your total account balance, and this is really important. So the point number 4 here simply is that determine how much, plan how much you are going to risk per trade, and make sure you don't risk more than that amount of money per trade. But however, there are some trades whereby you need to like increase your lot size just because you are fully sure that this trade is really going to go to this direction, which cannot be 100% sure, but if you are confident about your strategy, there are some places where you can increase it. But on average, have a specific amount of money you want to risk for every single trade you take. So that is about the point number 4. Now let's move to the point number 5. So now the 5th thing you should have in your trading journal, which is in your trading plan, is simply your trading conditions. Like, which market condition are you going to trade? Are you going to trade when the market is trending, or you are going to trade when it's ranging? And this is really important, because if you don't plan out the type of market you are going to enter, when you just open up your system like here, and you just like enter any market as possible, because you don't have any conditions that will determine what to trade. So I always advise that before you start trading, make sure that you pick out your own condition. Are you going to trade when the market is ranging, or you want to trade when the market is actually trending? So ranging is often like buying the market at a specific time, like taking short. But when you are trading as a beginner, I advise that you go for trending. The trending one is simply like looking at the direction the market is going to. Like you just take your time, analyze the market, say okay, the market is going to this direction, so you trade that direction as a trend trader. And this is really important, because if you don't know if you want to trade trending or ranging, trust me, you are going to always lose that your money, because you don't have any particular strategy you are trading. But if you have a particular strategy, you should be able to determine if you are going to trade a ranging market or a trending market. So my advice for beginners is that when I learn more about the trending market, because it will be a big help to you. Because I myself, for the past 3 years and 2 years that I've been doing this, I'm mainly focused on the trending market. Like, I'm more comfortable trading the trending market, because the trending market gives me even a clearer idea about which side the market is going, and when that trending market has been on this consistent trend, either a downtrend or an uptrend for the past 1 hour or for the past 4 hours to 15-minute time. Trust me, I'm just trading according to it. As long as my entry level conditions has already been stated there, and I'm going to tell you what an entry level means and why you should have entry level in your trading plan in the next point. So that is it about the point number. So you can go and do more research about ranging market and trending market to have a clearer idea about. Point number 6 here, when it comes to what to have in your trading plan, is simply your entry level. So in case you don't know what an entry level is, an entry level is a point whereby you determine if this way you want to enter the market, or you are not willing to enter the market at that point. So every single expert trader out there, every single trader out there has a particular level that determines their entry level. So me, most of the time I trade the breakout and then pullback trading entry level. So whenever I'm analyzing my market, I take a look at the breakout and trading. Look at the breakout and then pullback. So in case you don't understand, the pullback is the point at which whenever the market gets to that particular point, it all of a sudden then goes then it reverses back. So like for example, so the pullback simply means whenever the market hits that particular point, it automatically comes down, or if it's a down level, whenever the market hits that particular stage, it goes up. So this is what you need to know. So that is very advisable that you pick out all those things that determine your trade. Like for my trade, I like using the pullback method, because the pullback has been working for me very well for the past years. So I just analyze the market, wait for the market, look at all my various pairs that I'm trading, and then take it, like give it some time to actually hit the pullback level. So I just mark out the pullback level of my trading view, set up the alarm, and then whenever it hits that particular point, I receive the alert that point has hit this level. So it's time for me to enter the trade. Oh, let me wait for the trade to actually break out first. So for those who don't know about breakout trading, so the breakout is simply when a market moves above a support or resistance level. So a resistance level is more of that level whereby just at that pullback. But for the pullback, when the market reaches that point, it comes down. But for the breakout, when the market reaches that resistance or support level, it actually goes above it. So these are the things you need to know. So do you want to trade when the market actually breaks above that trending, that support or resistance line? These are things that are really important. So resistance is a place whereby the market is not is having difficulty passing. Why? Support is a place whereby whenever the market hits there, it goes the other direction. So are you willing to trade when the market passes that particular line, or you are willing to trade when it's within that range? This is what you need to know. So always know your entry levels. For me, I trade the pullback and the breakout, but most of the time I focus more on trading the pullback because it has worked for me the most. So that's it about the point number 6 here on what you should have in your trading plan. Now let's move to the point number 7, which is the final one in this video. And if you watch this video to this particular extent, I don't see a reason why you shouldn't smash on that subscribe button, like this video, and then also share it with your colleagues. So with that being said, let's move to the final point. So the final point here is simply setting your SL and then TP. So SL simply means stop loss, and then your TP means take profit. So every trader out there, trust me, every trader out there, be it having an account of $1 million or having an account of just $100, this is one thing you need to take huge advantage of, because Forex is a game whereby if you don't set a stop loss, trust me, your market will automatically drain the whole of your account when it goes against you. Mostly if you are a swing trader who doesn't sit and look at charts often, like it will just drain your whole account. But with the help of stop loss, whenever the market is going against you and it hits that particular point where you set the stop loss, it automatically closes the trade. And that's one advantage of using the stop loss and the take profit. And for a take profit, you set it like my take profit, I always set it at a minimum of ×2 the amount I'm willing to risk. Like if I'm losing $100 per trade or $1,000 per trade, I set it that okay, once the market reaches $2,000, the system automatically take profit for me. And once I lose the $1,000 or $100 I'm willing to risk, let the market close the trade. So that's something I always do, and that's something I always advise you to do as well. Whenever you are trading, set that, like tell the market that when the price reaches this particular place, close the trade, be it in my favor or against me. And this is really important because, for example, I made a trade yesterday on actually placed a trade yesterday on British pounds and then Japanese yen. That was my first swing trade that I've taken for the past 3 years. So I actually took this swing trade, and I wanted you that if I lose, because it was my first time testing a swing trade, so I really set my stop loss at a low range. I said if I lose $100, let the market close, and then if I make it profit, it should be a minimum of $300 before the market should close. So I just set it up there and I left it and went to bed. I woke up this morning not knowing that the market was actually going against me. Though I didn't lose the whole $100 because once the market was in my favor, I took advantage of what is called partial trade. So the partial trade is where you actually take partial profit from your trade while the trade is still live. So all you simply do is that you reduce your stop loss. When the market is in your favor, you reduce your stop loss, and then that partial profit goes in. So instead of losing the full $100, I end up losing only I end up losing just 1.8 cents or $2. That was what I actually end up losing, and this is one thing you should implement as well. So whenever you are trading and the trade is going in your favor, mostly if it's a swing trade, make sure that you take partial profit when the market is in your favor, so that if you have to leave that trade for like 1 month, like a week, days, you won't be at loss. Like even if you lose, you won't lose the whole of the amount of money you budgeted to lose because you're taking a partial trade as well. But when you make profit, you still take your full profit, and that is the benefit of it. So that is about the final point. Is simply set your take profit and your stop loss. And your stop loss and take profit should depend on your risk to reward ratio. And my risk to reward ratio is 1:2. Like my risk ratio should be 1%. And my profit ratio should be ×2 that 1% I'm actually wasting. And one of the easiest way to determine this is when you are using the position rectangle or the position tool on TradingView. So I'm not using TradingView to draw the position range out and say, okay, this is where I need to put my stop profit to get ×2 of my investment, and this is where I need to put my take profit and my stop loss, so that when I'm losing, I won't lose more than the amount I budgeted to lose. And when I'm taking profit, I'll take profit at a very lucrative stage. So in case you want to know where to enter markets, how to do all the rest, don't forget to let me know your own video request as well, and I'm going to look into it. So with that being said, don't forget to like this video, share it as well, and with that, have a nice day. Bye.